JD.com is down 50% year to date. There's a lot of negativity around China, and I completely understand it. There's worries about them invading Taiwan. There's all this stuff about it. And by the way, Mexico just surpassed China as the leading beneficiary of international relations with the US. So is this a temporary, is this a permanent thing? That's the question we all ask, because with China, with a lot of unknowns, there's going to be a lot of fear. If you look at JD's stock price, all-time high of $104 back in February of 2021, and it's currently sitting at $29. That's a drop of over 70%. So in this video, guys, we're going to go over JD. We're going to go over some high-level metrics. We're going to go over some news about them. We're going to cover some bull and bear cases from our community. This is where we ask people in our community, what are your bull and bear cases on it so we can engage in that? Some analyst estimates, and then we're going to finish it off with probably the question you're most wondering is, what is the right price to pay for JD? So whether you're a beginner or more advanced investor, there's something in this video for everyone. So watch it all the way through because it gets better as time goes on. So let's check out JD.com right now. So JD.com is an e-commerce platform in China, $46 billion market cap. Last year, in the last 12 months, they've made $3 billion for the last 12 months, okay? Now, here's what I do like right here. Their net income is $3 billion. Their 5-year average net income is 2.2, but look at their cash flow. $4.85 billion in the last year, 5-year average of 3.2. So a higher number than their net income. I like that a lot because most times it's switched because there are different rules for the SEC and accounting rules that can greatly affect these two numbers, harder to affect these two numbers. So I like the fact that the free cash flow is larger, very low profit margin, 2%. Okay, it seems like an Amazon kind of thing, with a gross profit margin about 14.5%. No dividend. All right, no big deal. For me, any Chinese company, the big question is there going to be an issue with China? There's a lot of negativity with China in general. You go look at any company, look at Alibaba. They're actually worse off their all-time high. Their all-time high was 320, and they're currently at 86 bucks. It's a bigger drop than the 70% that JD has had. So the question is, what's the negativity around China? Is it warranted? Is it unwarranted? I look at China and say, fast-growing economy. A recession for them is still growing. Fastest growing middle class. Here in the US, the average person makes almost $80,000 a year in terms of GDP per capita. In China, it's $12,000. So you look at all this growth potential for China. China will likely be the world's largest economy, that or India at some point here in the next few decades. That is not a bad thing, guys. I don't want this negativity around that. Yes, the US has slowed down its growth, but guess what? It's because we're so mature. But a strong world economy is a strong economy for the US because the US is still a leader in innovation and business. So let's not be negative about, oh no, China's taking over. Just relax on that one. So 2 pieces of big news. First off, JD.com is announcing iPhone 15 sales with guaranteed 1-hour delivery. Now, does this really affect the future value of the company? I don't think it's necessarily the fact that they're doing these iPhone 15 sales. It's more about the fact they're trying to get more and more shipping done fast. Second piece of news is JD Plus members now get unlimited free delivery. So that's great for them. I don't know the way it works in China in terms of how far people are. I imagine there's a lot of concentration of people in an area. But, just as an example, I was just in Minnesota this weekend, in Rochester, Minnesota, for a chess tournament. And it's funny because my buddy Matt, who lives there, he doesn't get same day delivery or next day delivery because he's in Rochester and it's an hour and a half away from the Twin Cities and they don't have a distribution center nearby. So it's amazing to me that I literally look on my Amazon to find same day delivery or next morning delivery. That's not even an option for him, right? Okay. So let's go check out some bull and bear cases on JD.com right now. Leo Jam, bull case for JD, low valuation, lots of cash on balance sheet, still growing, slower than before though. Well, makes sense. Regulatory crackdown apparently over, and China's trying to boost the economy and stock market recently. Okay, these are all very big tailwinds for JD. I love the low valuation. It's funny. I just posted in the community today about Nike and how somebody changed their assumptions on Nike just because the stock is down in half, even though their reason for it I thought was a very temporary reason. But it's a very permanent reason. valuation. If you pay a low price today, you are guaranteed that low price valuation. And if it goes lower, you can buy more. A lot of these other tailwinds are temporary things. All right, bear case, slowdown in Chinese economy. I'm not as worried about that because a slowdown in the Chinese economy is still growth. Okay, geopolitical risk with Taiwan, absolutely. That geopolitical risk is literally there. I mean, there's a lot of concerns there. And if something happens between China and Taiwan, there will definitely be an effect to the stock market in China. The question is, are you going to let that affect? Because look at history in the US. We've been through 2 world wars. We've been through Vietnam War, Korean War, Gulf War, the war in Afghanistan for 20 years that cost trillions of dollars. And where have you seen the stock market go? It still goes up. Now, obviously with China, when we're less knowns, it's a lot more concerning, right? All right, so great comment, Leo. All right, Ciatras, let's see what his bull case is. Chinese stock market sentiment is negative, so valuation is good. I agree 100%. Dominant retailer in China, profit margin is good. I don't think the profit margin is good for a retail business. 2%. Bear case, Kathy Wood owns the stock. Son of a gun, does she really? Does Kathy Wood really own the stock? If she does, that's very disheartening for me. Crap. All right, Wicked Willie. So Wicked Willie is our in-house analyst. 2 bull cases implementing discount programs on its three-party platform. So guys, 3P platform, it's third-party platform. I don't know if you're aware of this, but when you buy from Amazon, most times you're buying from a third-party vendor that just sells through Amazon. It's not actually Amazon buying the inventory and having it themselves. And you'll see it in there like sold by, blah, blah, blah. It's third-party platforms. JD Plus subscriptions have grown to 35 million users, which is a 20% increase in users. 35 million users. There's 1.6 billion people in China. 1.6 billion. That's incredible. 2 bear cases. In March of 2023, they launched a $1.5 billion subsidy campaign to stop Pinduoduo from taking market share, but this has largely failed, while PDD continues to grow quickly. Okay. Part of the reason for the fall is JD stock has fallen from revenue growth rates of 20 to 30% to mid-single digits today. So guys, great comments here. Leo, thank you very much for starting. I don't think I've seen you put some bull and bear cases yet. Thank you very much. So we're going to let you choose from one of our t-shirts. So choose from one of these shirts that are being displayed right now. Email help@everythingmoney.com and let us know which one you want. All right. So back to the software, back to JD.com. Let's go see what their analyst estimates are saying for JD. So they have 32 analysts following it right now, and they're expecting $1.67 in profit per share, growing to $4.77 in the next 4 years. But here's a concern of mine. Look at the jump from 2025 to 2026. It's a 100% increase. Okay, I'd be a little bit apprehensive about looking at that. But even at $30 a share, $2.30, it's not like I'm jumping through hoops, but look at this 20%, 15%, 31% over last year. So big growth in earnings per share. Let's look at revenue. I'm actually surprised by this. I would have thought higher growth rate in revenue by analysts. Look at this. 5%, 9.5, 9.7, 7.74, 4.7. Not as much as I would have thought. I would have thought a lot more than that for a company in China. All right. Now, again, though, remember, if you can pay a cheap enough price, the slow growth rate's okay, right? That's what's amazing. People always think growth rate and you have to have a huge growth rate to have a good investment. No, not necessarily. It helps, but it's still, if you pay whatever price for a high growth rate, that's not a good thing. Now, I want you to remember, guys, the stock used to be over $100 per share. And back then, BABA was at 320. Everybody loved China. It was great. Then the sentiment shifted. Can the sentiment shift back? That's the question. That's very important to ask. So we're sitting here, and now the final question to ask here is, what's a reasonable price to pay for JD.com? And that's why we have a stock analyzer tool. So guys, you've seen this in our community. You've seen me talk about the community. You've seen me talk about the software in many videos, and you're probably wondering what it's all about. So here it is. Now, I'm not asking you to make a decision yes or no right now. What I'm asking you to do is to make an informed decision. And you can't possibly make an informed decision from the outside. You have to make it from the inside. And in order to make it from the inside, you need to actually use the community and the software. It's just like if you're to buy a car. You're not going to buy a car without test driving it. You're going to take a 15-minute test drive and decide, are you going to buy the car or not? So the same thing here. But what I'm offering you is a 7-day free trial test drive. Get into the software, use the community, use the software. Only at that point can you make a fully informed decision. And at the end of those 7 days, if you decide to buy the software, awesome, welcome to the community even more. If you decide not to, I'm not going to be offended. No offense taken, go on, maybe it's not the right time for you. But again, to reiterate, I want you to make a fully informed decision, and that's why I'm offering you the 7-day trial, 7-day full access free trial. I'm fully confident that when you use this, you will realize how this can change the way in which you view money and investing for the rest of your life. So go to everythingmoney.com and sign up now for our 7-day free trial. No credit card needed. So let me see when was the last time I did JD in our history. Well, look at that, January 24th, 2022. I haven't done it in forever. So I'm going to start from a brand new assumption level here. Okay, now guys, I'm going to do a 10-year analysis here. And remember, I'm here to do revenue growth, profit margin, free cash flow margin, assign an ending PE and price of free cash flow, and then my desired annual return, which is essentially my margin of safety. So let's go through them line by line and figure it out. So revenue growth, big revenue growth in the last 10 years. Not so much in the last year, and analysts aren't expecting big growth. So low, middle, and high. I'm going to go with 4, 8, and 12%. Still good growth rates. 8%. Okay, let's see where we stand there, because I look at the Chinese economy going, if it grows at 6 to 8% a year, which it has been and has a lot of potential for, why is 8% not a realistic expectation? Now, profit margin. Now, we do see here profit margin has gotten better. Last 10 years, it averaged 1.2. Last 5 years, 1.9. And last year, 2%. But it's still pretty low. So I'm going to go with 1.5, 2%, and 2.5. Let's say they can figure out ways to really drive this profit margin higher as they grow their business with some higher margin parts, okay? Free cash flow, the good news is free cash flow was much higher. So actually, I could see the justification for even higher numbers on profit margin, because over long periods of time, free cash flow and profit margin should be about the same, okay? So I'm going to sit here and do 2%, 2.5, and 3%. Now, what PE and price of free cash flow do I want to assign at the end of these 10 years? Not today, 10 years from now, okay? Guys, the way I look at it is the market average is about 15 or 16 over long periods of time. If there's a high growth rate, high return on invested capital, big moat, you go higher than 15. For the opposite, you go lower. I'm not really feeling look at the ROIC. It is getting better. That is good. 0.2% over the last 10. I do like the fact that it's getting better. So hopefully in 10 years, it's a higher ROIC, return on invested capital. It means basically it's a way of a lot of people looking, can they protect their business? Is there a moat there? Can they get a high return on the money they invest in the business? You should be willing to pay a higher price for those kind of businesses. So for here, I'm going to sit here and put 13, 16, and 19. Same with the price of free cash flow. And my final metric, my final decision, what is my desired annual return? Guys, this has to factor in what risks are involved. Where else is my money? I can invest at 9 or 10% in a long-term ETF. So what return do I want to invest in a Chinese company that has a lot of growth potential, but also some risks? So guys, I'm going to put in here 12.5, 15, and 17.5%. These are high numbers. But again, there are a lot of question marks on JD. There's a lot of things that have to happen. Low margin, low profit margin, the China situation. There are a lot of concerns here. Now, guys, I'm going to hit the analyze button. I've got 1 more minute left in this video. Just hang on tight with me because I want to explain these numbers. My goal here is to teach you how to fish, okay? Teach you how to fish. So don't just run away from this and go right there. Just watch this next 1 minute. So I hit the analyze button, guys. The stock is currently at $29.60. All right, I got a low price of 16 to 22, a high price of 44 to 52, and middle price of 29 to 35. So if I pay today's price and my low assumptions occur, I'm going to make about 8.5%. If my middle assumptions occur, I'm going to make about 17.5%, and my high assumptions occur about 26.5% returns. So guys, you have to make a decision here. I did put high return requirements, but that's the whole point of this. Get into the software, use it for free, and put in your own assumptions. I appreciate your time. Check out everythingmoney.com. Take care.